Sorry guys, there was some problem with my system, so it got disconnected while I'm uploading the second video from where I stopped. Okay, just for your information, this is my welcome to my YouTube channel, and this is by the NCERT publishers, which have got the information where I'm putting the link in the description below. Well, as I told you, we are into the financial position of the company. What is the financial position? As I told you in the earlier class, is what? It is your assets and your liabilities. Okay, and the formula for the balance sheet position is what? Your assets is equal to your liability plus your capital. That will be, we will learn the later stage, but just for keep it in your mind that what is the balance. If you ask me for your bank to create your balance, to create a financial position, it will be basically your balance sheet position, which is assets is equal to your liabilities plus your capital. Well, now let's go to the accounting information to its uses. The accounting information can be used for, as I told you, the internal as well as your external sources. Now they have given the below are the list of the external users, like your investors and potential investors, information on the risks and returns, the employee groups, your lenders, customers, governments and other regulators, competitors, social responsibility groups. Okay guys, you can just read this part because it's just normal basic, it's nothing much. Just know who are your external users. Next one is your rules of accounting. Under your rules of accounting, as I discussed earlier, it is what? Accounting is what? To collect information and communicates what? Your economic data. Correct? And qualitative and financial in nature. It does not take qualitative and non-financial information. So what is it? The accounting information relates to past transactions and it is quantitative. It's always in the terms of monetary value. It won't take into consideration that, oh, I'm sick today, so it won't take that into consideration. In the company, say the manager is sick, that does not come into accounting. It's only the quantitative and financial in nature. Next, now this is the basic terms in accounting, guys. What do you mean by an entity? It means an organization. Okay, it can be joint ventures or sole proprietors, LLC. It's just an individual exists and the company is formed. The company is there. Then you have a transaction. A transaction is between two or more entities involved. For example, if I have to pay the supplier, I will pay him. So that's a transaction. Then if the customer has to pay me, that is a transaction. The transactions can be both what? Your cash and your credit transactions. Next is an asset. Now, as I told you, it comes under where the asset and your liabilities and your equities, it will come in your balance sheet. Okay. Now, assets are what? It's an enterprise that can be usefully expressed in monetary terms. It's what we are owning. In later stages, we will know there are different types of assets, current assets and your non-current. Okay, guys. It's two types, current and non-current, which is further divided into more, which we will explain later on. See, here it is. Assets are two types, your current assets and your non-current. Current assets which can be done liquidity, which can be easily converted into cash within a short fraction of time. You can see here there is cash and cash equivalents, inventories, trade receivables, current investments. Non-current assets are your fixed assets because it can be stored, it can be with us for a longer period of time. Non-current, deferred taxes. What are deferred tax? See, deferred tax asset means that sometimes we're going to pay the taxing authority more than what we actually had to pay. That is your deferred tax. It comes in your asset. Then you have your long-term loans and other non-current assets. And again, fixed assets are divided into your tangibles, intangible. Intangible assets are what? Your goodwills. Okay, they are actually, what is goodwill? It's basically you're purchasing a company which is more than the market value. So I liked one company, I buy it. See, the market value in the market is say only 40,000 rupees. But I find that the worth of it is say 60,000 rupees. So that is your goodwill because you're buying more than what the market is giving. That's your intangible. Then capital work in progress and intangible assets under development. Next is your liabilities. What are liabilities? Liabilities are obligations or debt that an investor has to pay at some time in the future. As I told you earlier, you have to pay your creditors. If you have borrowed money, you have to pay them back. That's all your liabilities. Even just for your information, assets and liabilities are divided into current and non-current. Current assets we have seen that where you can easily convert into cash, and the same thing with liabilities. Current liabilities are what which you have to pay quickly, like your short-term borrowings, your trade payables, and your other current liabilities. Whereas your non-current liabilities are long-term borrowings, your deferred tax liabilities, just the opposite of your deferred tax assets. Next is capital. Now, what is capital, guys? Capital is basically what the owner of the company will first put in the company for to start the company. That's your capital. As you can see, the amount invested by the owner in the firm is known as a capital. It can be form of cash or assets. It's also shown on the liability side. As I told you, the equation of it, what is the equation? Assets is equal to your liabilities plus your capital. So that is what the capital is, that what the owners will put into the firm in the starting, what they have invested. Next is sales, which is easy. Sales are what? Your revenue. What is the income of the company? How are they generating? It can be cash sales or credit sales. Revenue. Now, okay. Sorry. Sales are the total revenue from goods and services collected, and then you have its revenues, which is the amount of business earned by selling its product or providing services to customers. There are other kinds of revenues, which is your commissions, interest, dividends, royalties. What are royalties? Royalties are those where you sold something of which has high value, okay, that name of it, and you're getting money out of it. That's called as your revenues. Revenue is also called as the income of the company. So what is the revenue? It also has the income. Expenses, we know we have to pay the salaries, your depreciation. See, rent, wages, salaries we have to pay. Depreciation is the depreciation which is cost on the assets. Okay, you're not actually paying anything. It's just an expense, but then the cash is actually not going out. That we will learn in later stages what should be done with depreciation. It is an expense, but the cash is not going out. But for the rest of this, for your rent, wages, salary, the cash is going out. Expenditure, it's what? Spending money or incurring a liability for some benefit. Purchasing of machinery, purchasing of furniture is an expenditure. Next is your profit, which we already saw. Profit increases the investment of the owners. Gain is when you are selling a particular asset, you're making money out of it. I purchased an asset, say for example, for 50,000 in that say on 1st of January. I sold the same asset on say 10th of December for 100,000. So I made a profit of 50. That is my gain. Okay. What is a loss? That I sold it less. It's a loss. Now I will read this for you. Gain is what? A profit that arises from events or transactions which are incidental to business, such as sale of fixed assets, winning a court case, or appreciation in the value of an asset. What is a loss? The excess of expenses of a period over its related revenue is termed as a loss, which I told you, it will decrease the owner's equity. You are losing money. Okay. There is discount. Now, as you know, when you go for shopping and all, for buying clothes, you get kind of discounts. Correct? Discount is what? It's a deduction in the price of the goods sold. You're reducing the price of the goods sold. In this, it's offered in two ways. Offering deduction of agreed percentage of list price. Okay, the time of selling good is only way of giving discount. It's called as your what? Trade discount. Only the time of selling goods. After selling the goods on credit basis, the debtors may be given certain deductions in amount due in case if they pay the amount within the stipulated period or earlier. That's a cash discount. So if you're going to pay early, if the person pays the amount earlier, they will give a cash discount. So it encourages prompt payment by the debtors. Next is your voucher. Under voucher, the documentary evidence in support of transaction is known as a voucher, which I told you. When you're going to put your entries in the file, okay, you will have that you're going to pass an entry in the system. When you pass an entry, it will print you a voucher which has to be supported with the supporting documents. It can be a payment or a receipt. That's the voucher. You have a documentary evidence. Next is your goods. What are the goods? It's basically in which the business unit is dealing for buying and selling or production and selling. The items that are purchased for use in the business are not called goods. If you are purchasing it for the business use, guys, remember this, it can come as a tricky question. The items purchased for use in the business are not called goods. For example, for a furniture dealer, purchase of chairs and tables is termed as goods, while for other, it is furniture and is treated as an asset. So if I'm a furniture dealer and I'm purchasing, it is my goods. But then if I'm a normal company, okay, normal real estate company or something, and I'm buying furnitures for the company, that is my asset. It won't be I don't have anything to do it with my goods. That is why you should keep in consideration. Even for stationery, if I'm a stationery business, as they have mentioned, if I'm going to sell stationery, the stationery is my goods. But then if I'm a real estate company and I'm buying stationery for giving it to the employees for using it, it is not a good, it's just an expense. Next is drawings. Drawings are what? They're withdrawal of money or goods by the owner. That's called drawings. Whenever the owner withdraws money from a business for personal use. Okay, for personal use, it is called as your drawings. It reduces the investment of owners. Now, how does it reduce? It will reduce from your capital. What is the capital? It's basically what the owner has paid or invested in the starting, correct? And when the owners are withdrawing money for their own use, you're going to reduce the investment of the owners. Next is your purchases. Purchases are total amount of goods procured by a business on credit and on cash for use or sale. So you can use it or for selling purposes. Purchases are made of merchandise for resale with or without processing. There are different concerns. One is for your trading and the other one is for your manufacturing. What it is saying for manufacturing is raw materials are purchased, processed into finished goods and then sold. So you're going to buy an item, as I told you earlier, you will process it and then sell it in a finished goods. That is your purchases, correct? Purchases can be both your cash and your credit purchases. Next is your stock. Under your stock, it's a measure of something on hand's good. Spares and other items in a business. It's called stock in hand. What items are available with you in your warehouse? How much stock is available with you? It is basically which is lying unsold at the end of the accounting period. It's called the closing stock. So you have is your beginning inventory. You have is ending. Now say for example, all the companies open on 1st of Jan. Okay. That's a new accounting period for all the companies. 1st of Jan, what is your beginning inventory? It means how much stock do I have left in my warehouse? That's your beginning inventory. During the period, how much has been sold, purchased, what is going to happen? And your ending inventory is what? At the end of the period, after you have beginning, what you have purchased, what is the balanced inventory left? That is called as your ending inventory. Next is the debtors and creditors. Debtors are the ones who has to pay amount to the company. Okay, that's basically your customers. They're the ones who will have to pay or they owe to the enterprise. And who are creditors? Which the company has to pay to the creditors. So, debtors are persons who owe to an enterprise and creditors are persons who have to be paid by an enterprise. Okay, they have to be paid by an enterprise. Guys, this is the end of chapter 1. Okay, I will be putting both the recordings online. Please go through both of them, and I'm sorry about the problem which had happened. I'll make sure it doesn't happen again. So now we will go through the summaries just for understanding again. So what is accounting? As I informed earlier, it is for identifying, measuring, recording the transactions. Accounting has a source of information is a process of identifying, measuring, recording, and communicating the economic events. What are the uses? It is used for the organizations, for the management, for decision makers, internal, external uses. Qualitative characteristics. What is the qualitative characteristics? It's your R square UC. Relevance, reliability, understandability, and comparability. Then we have with your objectives, which we have already seen, to calculate your profit and loss, records, financial positions, and make information available to various groups. Role, languages of the business, historical record, current economic reality, information systems, and services to users. Okay, here there are some questions which have been given for practice. I think you guys can solve it because I've already explained it to you. Okay, um, and in case if you have any doubt, please drop in the comment section. I will make sure I will try to answer all the questions possible. And in case anything, if there's any type of questions, queries, you can just please contact, you can just put it in the comment section below, and I will be there to answer all your queries. Thank you guys. I will soon upload the second reading as well. In the meanwhile, you can go through the first chapter. If you have any other questions where you are confused or you want me to explain further, kindly let me know. Thank you.